Hello, this is Jim Smith at GannAnalysis.net. You can reach me at jamessmith@GannAnalysis.net. Website is www.GannAnalysis.net. Today we're talking about the Dow. It's the same thing I talked about on September 3rd. Why September 3rd? Because it was the anniversary of the Dow high, 1929. That was the exact high. Here we are here. Of course, the February high was a little higher, but for all intents and purposes, one of the concepts that you need to get your mind around is that a lower high is often more predictable than the actual high. A lot of people try to call the top. It's very difficult, but calling a lower high is much easier. And one of the tools we use with Gann to call that lower high is the anniversary of former highs and lows. And it's not to say that because you had a high back in 1929 that this has to be a high, but as I said on September 3rd, this does look like a high. This is not the only tool that we look at. This is the only one I'm going to tell you about today, because obviously I'd like you to subscribe to the service. I don't want to give everything away free, but let's put it this way. This is a public service announcement because somebody has to stand up against the fundamentalists. There are, even today, I read another newsletter where they're telling you just buy for the long term. Don't try to time the market. If you just invest, from your savings every month, a little bit at a time, you're going to make out over the long run. Well, what's wrong with that view? Well, back in 1929, a whole bunch of stocks, a whole bunch of companies went totally bust. You cannot invest for the long term if you bought on September 3rd, 1929. It took you over 20 years for the market to come back to ground zero. It was the 1950s before it came back. But beyond that, you probably never made it back because maybe half the stocks you bought were of companies that went bust. So the actual index is skewed to survivors. Those companies that don't survive aren't in the index anymore. Game over. And it's game over for you and your money because you're never getting it back. If you invested in 1929 at the top, you never got your money back. And that's why so many people hated stocks for over 20 years. Like I said, it was the 1950s before you got back to the same level. And beyond that, people never trusted stocks the rest of their lives if they went through that. And I'm not saying here that this has to be 1929, but I'm telling you, it makes the hair on the back of my neck stand up to see that September 3rd, 1929 was a high, and here we are, 91 years later, September 3rd, forming a very important lower high. And there's a whole lot of other Gann cycles, a whole lot of other Gann techniques that I could talk about that support the view that this was a very important top here. Now, granted, we haven't seen the huge sell-off. We got a nice little sell-off to begin with. I warned on September 3rd that this was probably a high. I put out a YouTube video. You can go back and check it out. It's time-stamped. The reality is, I knew that was probably going to be a high. My clients knew it because I told them about it. Now, if you're listening to a fundamental analyst who's telling you just, buy and hold, that's the conservative thing to do, invest for the future, you got 20, 30 years before retirement, so if you just try to not time the market, you'll be okay. You just put a little money in, even if the market goes down, you'll make it back over the long run. That is such BS, such nonsense. It makes me angry when people give bad advice like that. I'm telling you, when there's no, even among the fundamental analysts, you can talk about CAPE ratio, you can talk about PE ratio, you can talk about all different metrics. They're all skewed beyond belief. A good analyst, they know that this is a top. So I'm not telling you to go out and sell the market short. I'm not telling you to do this, to get aggressive on the short side. But I'm telling you, if your life savings is invested in the market, you can't wait for some billionaire investor to come out and tell you to sell the stock market. They're not going to do that. Why not? Because they need someone to sell to. Why would they tell you to sell the market? They want to sell before you. And then after there's a total panic, then they'll tell you, oh, yeah, you maybe ought to want to sell a little bit after the market's down 50%. There is no shame amongst a lot of so-called experts on Wall Street. They will tell you after the fact that, oh, yeah, that was a high. They won't tell you why. They won't give any credit to W.D. Gann. They won't say, oh, yeah, it was the anniversary of the 1929 high, and according to W.D. Gann, the anniversaries of highs and lows can produce highs and lows into the future. They're not going to tell you that. They're going to tell you, oh, I'm just such a clever person that I figured it out. They're basically telling you that opinion matters, their opinion, more than science. See, the problem here is that Gann is based on science, and I don't care how famous the investor is, if he's just spouting nonsense, and you can tell right away, they're going to throw out figures like if they're talking about silver, they're going to say, oh, silver's going to $300. Why? Do they have any reason for that? Do they give you proof? So the geometry of time and price, do they tell you why? No, they just say it's their opinion. Same thing with the stock market. They're going to say, after the fact, they're going to say, oh yeah, I knew it was going down to this level. But before the fact, they're not going to tell you anything. With Gann, we tell you in real time as it's happening. And for my clients, I told them before the event, you know, get ready, things are going to happen. That's not what fundamental analysis is all about. Fundamental analysis is all about telling you after the fact what you should have done after it's too late to do anything. I don't see the value of that. I think you absolutely have to try to time the market. Doesn't mean you're going to get it right every time. I had a Gann chart back in June that looked really good. I thought maybe there would be a high in late June. It turned out it did not work. The market kept going higher. But one of the concepts, and I think people have a hard time with, is that you can have a cycle. They don't always work. But if the cycle proves itself, in other words, if you take out certain key support levels, you know the cycle's working. So in other words, we have a high here, September 3rd, 1929. We suspect that this is an important high here. And then once you take out certain key support levels, it gives you confirmation that you're starting a major correction. And I'm not here to tell you exactly what that level is. I'd like you to subscribe. I'd like you to take the service and see what those levels are. That will confirm how far down we're going to go. But for this purpose today, I just want to explain that concept of Gann is about time and price. The cycles tell you when the likelihood of a top or bottom, and the price support and resistance levels, the what we call Gann retracements or the square of 9 levels, they give you price levels to watch that will confirm the next change in trend. So you use both together. You use the Gann cycles to tell you when a turn is likely, and then you confirm it using square of 9 levels or Gann retracements or any of a number of other price tools. Now, that's something that you're not going to hear from many people because they have a vested interest in knocking down cycles. They're going to say, oh, it didn't work, it didn't work, it didn't work. Well, that one time it didn't work. What I'm telling you is that sometimes it's not going to work, but you never really get caught out because you're waiting for confirmation via the price signal. Back in June, it didn't bother me that the cycle didn't work. Why? Because I had a price support level. It never took it out. And I thought, okay, that cycle didn't work. So you look for another cycle, and it's sure enough, we've got here the anniversary of the 1929 high. It looks like a major top. And if we take out a certain support level, a Gann support level, then we'll know that we're starting a major correction. I think we're probably starting a correction. I haven't proven it yet because we haven't taken out the support level that I'm looking for. But, I'm just warning you, it's not a bad idea to have higher levels of cash. You're not going to hear that from a lot of people because fund managers want you to stay vested in the market, and a lot of newsletter writers, if they're writing about the stock market, they don't want you selling the stocks and going to cash. Then you won't buy their newsletter. It's like, why would you buy their newsletter if you're all in cash and you're safe? They want you fully invested all the time. Now, from a Gann perspective, we just acknowledge there are times when you do not want to be in the stock market. I think that should be common sense. But in this era, common sense is pretty uncommon. And I think there's a lot to offer here with Gann. I'd love to show you more. Go to the website. If you register, you'll get access to some older reports and even some fairly recent reports, just to give you a sample of what it's all about. And if you're interested in, then you can subscribe. There's a 3-month trial subscription and see if it works for you. At the end of the 3 months, if it doesn't meet your needs, there's no obligation to continue. You're done. You just say, I don't want to renew. That's it. But I think if there's ever a time to subscribe to a Gann newsletter, which is all about timing, because timing is important. Even people who say they don't time the market, they time the market. They tell you not to time the market, but they time the market. It's inherent in the whole, you have to make a decision, buy or sell. And unless you're one of those strong believers in the totally retarded view of buy and hold, you are going to eventually want to sell, and it involves timing. You're going to want to know when to sell. Buy and hold was not a good idea in 1929. It's not a good idea now. There are times that you want to be out of the market, and there are times to seek safety. And a lot of people are not going to give you that advice, but I'm just telling you right now, this is one of those times where even if I'm wrong and the market goes to new highs, so what? You lost a little opportunity. You didn't lose your money. But if I'm right and knuckleheads who told you to buy and hold are wrong, you lost your life savings. So tell me who the charlatan is here. Is it me, a guy telling you to time the market, or the fundamental analyst telling you don't try to time the market, don't try to time the market? If this gets me a little agitated, I think they are doing irreparable harm to a lot of people by peddling nonsense. So I hope this helps you. I would like a lot of people to understand that these are risky times for the stock market. Doesn't mean you have to go out and short the market, but it does mean if you have a lot of exposure to the stock market, you need to raise higher levels of cash. If the market rallies next week, maybe you take advantage of it to get out. You don't have to go totally to cash, but I think you should have higher levels of cash. If you have a few stocks that you really like, fine. You can hold on to them, see how you do. But honestly, in a real bear market, almost everything goes down. So this kind of advice is of no use whatsoever if you wait for the financial media to tell you with 20/20 hindsight after the fact. It's only useful if somebody tells you before the fact. So I hope this helps you out, and would like to hear from you. Send me an email, jamessmith@gannanalysis.net. Tell me what you think. Always happy to chat with people.